So if you're someone that's interested in dividend investing, dividend growth investing, investing in great companies over the long term, building your wealth that way, with dividends kind of supplementing that as well, stick around for this entire video. I'm going to reveal everything in my dividend growth portfolio today, and I think you're going to find a ton of value in this video. So I'm making this video in an effort to start being more transparent on this channel. I know there's been a lot of questions, a lot of concerns about, hey, do you actually own the stocks you talk about? Do you actually put your money where your mouth is? Are you just pumping stocks out there? I hope this video kind of helps to lower some of those tensions that some of you had, and I really do hope that it provides you a ton of value. I have disclosed positions over the years. I have disclosed what stocks I own. However, I rarely disclose a dollar amount because honestly, it makes me a little bit uncomfortable because there are people in real life that I know that watch this channel and it can make things a little bit awkward. However, I'm gonna put that aside for this video. I'm gonna reveal it all here in my dividend growth portfolio. And yes, as the title says, I do hold well over $100,000 in this portfolio. My goal with this portfolio is to let it grow over time, let the dividends come in, let them compound, let the gains compound, and then hopefully 20, 30 years from now, I'll be able to tap into this portfolio and have a nice stream of monthly dividends that's able to supplement my lifestyle. I'll be able to pay off rent or mortgage at the time, food expenses, maybe some vacations, pretty much anything I want to do for my lifestyle. Hopefully, if things pan out well, this dividend growth portfolio, the dividends coming in from that, will pay for all of that. Now, I've done the math, and I think it's definitely doable as long as I keep adding into this portfolio every single year, which I plan to do. And as long as I focus on great, high-quality businesses that have a strong history of paying dividends, it's gonna happen. So as of today, guys, this video sits at just around 125,000 US dollars. What I do want you to note though is that this is just one of my portfolios. This is not my core portfolio where I place bets on my high conviction growth stocks. You know, I've talked about stocks like Salesforce, Amazon, Facebook, Splunk, Peloton, plenty of others on the channel here. That doesn't belong in this portfolio. Those are not dividend stocks at all. Those actually belong in my core portfolio, which I'm much more active in. And I'm constantly researching to, buy the next great business that I think can return me massively over the long term. Heck, even stocks like Tesla, Beyond Meat, they all belong in my core portfolio. I also have a very small relative speculative portfolio where I have bets like Clover Health, Neo, a few other companies that, hey, I don't know what's going to happen with these businesses. I want to have a little bit of exposure here to see what happens over time. And if I lose it all, I lose it all. It's not going to make a dent really over the long term. That portfolio is sitting at maybe 3 to 4%, never above 5% of my overall net worth. So now for this dividend growth portfolio, for a stock to be added here, it has to be high quality, has to be growing their dividends every single year, has to have a history of growing dividends. Ideally, I want to see them grow at 7 to 8% compounded for their dividends year over year. And of course, it has to be a business that I think will be bigger and better over time. I'm not going to just invest for the sake of dividends, which is why I don't really invest in kind of dinosaur companies, which, have good, strong cash flows, but I'm not really certain about their future. Anyways, that's enough talking, guys. I hope you enjoyed this video. Let's jump into it and let's reveal all my positions in here. Okay, guys, so here is my portfolio tracker, and we're going to go through this stock by stock. And what I want you to pay attention to is pretty much the portfolio weighting for each one of these stocks. I guess the number of shares, if you want to look at that. The book value, which is what I paid for these positions. The market value is what it is today after the stock has gone up. Of course, profit and loss speaks for itself. This again is the dollar amount for profit and loss. And then here's some interesting stats, particularly just for dividends for these stocks specifically. What the current dividend is, how much I'm getting paid per year based on number of shares I own, my personal yield on cost. This is important because this will keep growing massively year over year, depending on the growth rate of each of these companies for their dividends. And then finally, I just kind of put this in here just for my own reference. How many years have these companies been paying and growing their dividends? You'll notice there's one anomaly here, which is 0. They're not paying any dividends right now. We'll talk about that stock as well, what I plan to do with it when we get to that. But first, let's kick off the list with our largest position, guys. And this is McDonald's. Nothing like McDonald's. This is one of the strongest brands in the world. Restaurant stocks were hit massively this year. I think they're still undervalued here in 2021. And I bought heavy. I spent around $16,000 here on McDonald's stock, picked up 75 shares of this business. And I did this pretty recently actually, because you can see my cost basis is 216 and we're up around 6% on this position, close to $1,000. But here's the real value of this portfolio, guys. I don't really care about this number. Even though we're up 15,000 on all of our positions, I don't really care. I'm focused on this number right here, the total dividend income per year. I want to see this number increase. I want to see this number be able to sustain my lifestyle over time. And that's going to mean it's going to have to grow a lot bigger. Even though my total portfolio value today is sitting at around $117,000 in stock plus around $7,000 in cash, so about $125,000 in total. This number is what needs to increase massively. I need to see this go to like $10,000, $20,000, $50,000 over the years. And that's when this will be a true passive income portfolio. For now, all these dividends, I try to get that reinvested back in businesses, back into these stocks, and that's kind of the objective here. But anyways, McDonald's is paying me around $387 per year just for holding their stock, and this is on top of the capital appreciation. So I have a strong outlook for this business. Don't think it's going anywhere. I'll probably add to it over time as well. And that's what my first position is, my largest one. Second stock is another consumer staple giant, PepsiCo. This one is, again, one of my favorite companies when it comes to food and drinks and snacks and that kind of stuff. I own 100 shares of Pepsi, just around $13,400 or so in this stock, up around 5.7% right now. And again, we're up, a few $100s on this stock, but the dividends, I'm getting around $409 in dividends every single year from Pepsi. And this has me excited because this company grows their dividend, like McDonald's, close to 8% per year. This number is going to compound very quick. And then as a kind of gravy on top for owning such a great business, I get some capital appreciation as well. So far, these two companies make up over 25% of my portfolio, really. So these are definitely some big conviction plays that I have. Moving on to our third largest stock, guys, is 3M. We've discussed this plenty of times on the channel. I've talked about this in previous years. When the stock was around the 140s, 150s, 160s, I was buying heavy. And now we're finally starting to see industrials pick up, stocks like 3M pick up. And of course, as a result, I've slowed down my buying on this, but I still hold 61 shares, around $10,000 worth of the stock. We're up close to $2,000 on this position. But you know what I'm looking at? We're getting $361 in dividends every single year from 3M. Now this one is special because this is a dividend king, 62 years of dividend growth. And that's why I absolutely love having this in my portfolio. I think this one's going to earn me a lot of money, not only from dividend growth over time, but also from capital appreciation. I think the stock price is severely undervalued. I think we'll see some good gains overall from 3M over the coming years. Moving on to my fourth largest stock, guys, Lockheed Martin. This one we talked about on the channel very recently, is one of my more recent buys here in this portfolio. Managed to catch it close to its bottom here. That's where I found a ton of value, so I went heavy. Bought 30 shares, around $10,000 worth of the stock. Since then, in just a few weeks, we're up 13% on this position, $1,400 or so. But that dividend income, guys, $312 per year from Lockheed Martin. And they have a very strong growth rate compared to some other companies. Close to 10% is what they raise their dividends year over year. So very strong business, strong outlook for this company. I think aerospace and defense is going to be one of the massive growth industries over the next few decades. And Lockheed Martin is positioned to take advantage of that with a strong business and strong balance sheet. Stock number 5 on here is Starbucks, another restaurant company. I don't know, I kind of feel like I like Starbucks a little more than McDonald's, even though it's a smaller position in my portfolio. But you can see I've done incredibly well on Starbucks. $7,000 is what I put in. We're at $11,000 now. I own 100 shares of this company. We're up 55% on this stock. And it pays me around $180 in dividends, so nothing too crazy yet. But look at the way that they grow this dividend. They are aggressive, over 20% year over year. Last 10 years they've been paying and growing this dividend. I think this one is going to be one of the strongest dividend payers over time. I love this company. I will plan to add to this over the years, build this position even larger. Right now it makes up just over 9% of my overall dividend growth portfolio. And I think even at $112, yeah, it's a little bit expensive now, but it's still an incredible business. Stock number 6, we have Visa. Again, a recent buy here, close to $200 per share, is my cost basis on Visa. Around 8.8% of my portfolio, I hold 50 shares of Visa, $10,000 worth, and we're up, a modest 8% on this stock already. We're getting around, $64 in dividends from this company, which is, you may be wondering, why would I, waste time, money, effort buying Visa for only $64 in dividends per year? Why put in 10,000 here when I can put in, for example, 10,000 into 3M and earn $361 per year? Well, it's because of this growth rate that Visa has. Visa is growing their dividend much, much quicker than 3M. So over time, I not only get this dividend growth compounding with Visa, but I also get huge capital appreciation upside. Even though I don't care for that really, it tells me that this company has a ton more room to grow, get to an even more mature, even larger business, and at that point it can pay even bigger dividends. So I want to get in early, ride the train up, and I think Visa is one of these massive fintech giants that you just have to have exposure to. Either Visa or MasterCard, both are great companies. I personally chose to go with Visa though. Up next, we have another dividend king, Altria. This one's been paying dividends for 51 years, and I got in, a while ago in the stock. I've been holding this for a little while. I've been underwater in this position for quite a while as well, because my cost base was 44. The stock dipped into the 30s. I was down quite a bit, but hey, I just continued holding because this stock pays me, guys, over a 7% dividend. 7.6% is my yield on cost here, and I've been earning $584 per year just for holding this stock. So I have around $7,600 of my money put in. It's up to $8,700 now, so we're up, $1,100 or so. And you combine that with the $584 in dividend income. Yeah, I absolutely love Altria. I talked a ton about this stock on the channel over the last few years. Some of you followed me on this. Some of you said this is a company that's dying, but the fundamentals kind of spoke for themselves. This company is still going to be just fine. I think their bets on things like Kronos and Joule and all these things over time will pan out. They're making efforts to innovate. They're making efforts to be relevant. And I like that for a company of this size, a company of this incredible of a dividend. Nothing bad to say about this company. I like it. Moving on. Number 8 in our list here, guys. Procter & Gamble. Staple company, super stable company as well. One of the best brands out there for dividend investors. I mean, if you're a dividend investor, you definitely own the stock in your portfolio, no doubt about that. And I think over the last few weeks, we've had such an opportunity in the stock that I could not pass up on it. I bought 50 shares of this. It's up around 6% or so already in just a few weeks, $400. But the dividend income, I think, is pretty good here. Around $158, 3.44% is what they grow it by, but they are a dividend king. So this one is one that I can sleep easy at night knowing that they're not going to cut their dividend. They're not going to lose that king status. They will do whatever they can to sustain this and grow this over time. I love Procter & Gamble. Nothing more really I need to say about this. It's a good company. Stock number 9 in this portfolio is Abbvie. Guys, this one I think is still providing us great value here at $107 per share. I'm up over 53% on this position. I have 63 shares in this. I should have bought this heavier back then, but I own this in my other portfolio as well, like my core portfolio. So I've done quite well there as well. And I think this company still has a long runway to go. I like healthcare going forward. I like companies like Abbvie going forward because they're a massive dividend payer. 7.4% yield, so I'm earning $327 per year on this stock. They grow their dividend massively by 19%. Now they have spun off from another business, so the history for dividend isn't that clear, but if you combine what the previous business did plus what Abbvie has done over the years, this is almost at dividend king status. And I think, with the earnings that they have, with their recent merger with Allergan, with the future of this company, this one's going to be a king, super king over time. I love this business. All right, rounding it off now, number 10, Boeing. We got to talk about this one, okay? This is the only stock in this portfolio that is down. It is red. I'm down 27% on this, over $2,000 on this position. I'm not getting paid any dividends on this. My cost basis is close to $350. The stock right now is at $250, makes up 4.4% of my portfolio. This one I'm kind of a little torn on, but I thought about it. I bought Boeing because it's, a duopoly. It's a company that doesn't really have much competition when it comes to aerospace, airplanes, that kind of stuff. Airbus is the only other one that's really competing with them. And I think they're going through a tough time right now. So I'm going to give them a chance here. I'm going to give them about a year or two to figure their stuff out, start paying down some of their debts, and possibly reinitiate that dividend. I think over the next few years, we'll probably see this stock recover in terms of its actual price. So I won't be down 27% on it. Dividends may take a little bit more time to come through, but as of right now, I'm willing to wait. I'm willing to wait a little bit, give this company a chance, see if they can come back and become one of those strong dividend companies once again. I think what happened in 2020 was just an anomaly. It's a very unrealistic that a company is going to face, airplane shutdowns again and all this kind of stuff that we went through last year. So if Boeing can get through that, which they did, I think that shows how strong they are as a business. And I think that, it adds more confidence to me to hold this for the very long term, which is why for now, I'll keep it in here. Moving on, stock number 11 in this portfolio. We're getting into our slightly smaller positions now. Flowrock, so around $4,600 in. We're up, just under 2% on the stock, close to $100 in the stock. But we're getting a nice dividend of $111 per year. This company, I have a yield on cost of around 2.39%, so nothing too crazy. But they grow their dividend nicely by 7.5% per year. They've been doing this for 43 years. They're a company that's more relevant than ever. I think they're going to just continue being as relevant as ever with their disinfectant wipes and all that stuff. They've really helped us in 2020, and I think the world has shifted now to recognize the value of their products, and I think that's going to be something that's a permanent trend going forward. I like this company. I may add more to this over time. We'll see, but 25 shares, not a huge position, but some exposure. Okay, getting into our back half of the list here, guys. Stock number 12 is Lowe's. This is a home improvement play. I don't own Home Depot, I'll tell you that right now, but I own Lowe's. Lowe's is a good company. I'm up over 100% on this position. I only put in $2,000 or so into the stock, so it's doubled to like $4,000 now. Nothing too crazy here, but it is still a company I don't ever plan to sell. It's a good stock. It's a good company. They grow their dividend nicely. 16% is what they grow it by. Long history of growing this dividend. They're a king as well. And I'm earning $50 a year from dividends along with some massive capital appreciation. I'll take it. It's not one of my highest dividend payers in this portfolio, but it is still a respectable business that deserves a spot in this portfolio. Getting into our last couple picks here, guys. Caterpillar is one that I love. This has seen a big bull run in the last few months. I bought the stock around $119 per share. I only bought 10 shares of this, so nothing too crazy again. Pretty much doubled up our investment here, made about $1,000 on this, making around $41 in dividends per year. And, Caterpillar has a good history of growing this dividend as well. 8.45% growth, 3.459% yield, which is respectable. And I think industrial play with the infrastructure bill going through and all this stuff, Caterpillar tends to benefit from this over the very long term. So it's going to be in my portfolio. It's going to be a stock I continue holding, and I'm happy with how it's done so far, but I think there's a lot more for this stock to go. Okay, guys, so before we look at the last final stock here, I do want to just point out one thing. I do have around $7,000 sitting in cash right now. Now, I haven't decided if I'm going to put it towards one of these companies here, or if I'm actually going to go and open a new position in some new business. I'm still doing some research. Earnings season is actually very close by, so I may actually just deploy it during that time. But remember, the idea with this portfolio is to deploy my cash ASAP into these great dividend companies, have that dividend grow over time, have that compounding effect come into play, and just let it do its thing. You can see it's done $15,496 for me for doing nothing. And that's, besides the almost $3,000 in dividends we're earning from this portfolio every single year. That's going to keep growing every single year. And you may also notice that, I have that says Canadian USD rate. That's because I'm based in Canada. This portfolio, technically in US dollars, but if I ever wanted to cash it out, I could pull it out in Canadian dollars. The exchange rate right now is around 1.26. So theoretically, in Canadian dollars, I have around $155,000 in this portfolio. But hey, Canadian dollars are like monopoly money, right? So it's actually only around $125,000 USD. Okay, guys, so let's move on. Let's reveal our final stock here, Microsoft. This one is one that I thought about adding, and then I was like, you know what? Let's just do it. Let's just add a little bit of Microsoft. I want some tech in here. It was kind of between Microsoft and Apple at the time. Microsoft showed better value, so I bought Microsoft. You can see it's done incredibly well for us, up 54%. Doesn't pay us a whole lot of dividends, around $11 or so right now, which is, it's negligible, but it's something, I guess. But the real interesting part here is that it grows its dividend by close to 10% per year, and it's been doing this for 17 years. And if you've seen Microsoft's balance sheet, they can grow this dividend for decades to come. This is going to be a dividend king over time. This is going to be one of the best dividend companies over time. And similarly to Visa, I'm trying to get into this one a bit earlier. Ride that capital appreciation, ride that dividend growth compounding over the years. And I'm sure in 20, 30, 40 years, this will be one of the strongest dividend stocks in my portfolio. So guys, that's my dividend growth portfolio. I hope you got a little bit of insight here as to how I allocate things, how I break things down, what kind of businesses I have really strong conviction in over the long term in terms of dividends. And my plan is to keep you guys updated on maybe a monthly or quarterly basis on how this portfolio is doing. Hopefully we have some sort of downturn again, so I can show you guys how this does over a downturn. But regardless, I'm not going to be selling any shares. And like we saw, the $7,000 cash will most likely be deployed in the next update video. So if you found any value at all, hit the like button, hit the subscribe button, share this with a friend as well who's considering dividend investing. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.